Welcome to the Mayor of Money podcast with former Burlington Mayor Rick Goldring, CEO of Goldring Financial Leadership. In this podcast, we provide successful business owners with cutting-edge information and strategies in the areas of estate and financial planning, including wealth and risk management. The podcast also features exclusive interviews with very successful entrepreneurs that Rick has known and worked with during his career. Now, on to the show.
I'd like to welcome to today's podcast on the Mayor of Money, Simeon Papailias. And Simeon is the president and co-founder of REC Canada, the host of Broker's Playbook and Investor's Playbook, and a coach and mentor for Canadian real estate. So needless to say, he's been involved in real estate for a long time. And so Simeon, tell us how you got involved in real estate.
Thank you for having me, Rick. And the story of how I got into real estate goes back to my days in service, and I was born and raised in the restaurant industry, and as independent restaurant industry, meaning not franchises but mom and pop shops. We had my parents had initially built the business up to 3 or 4 restaurants, so we could call it a small chain. And as they were aging and we were growing up, they were looking at ways to sell those businesses. And we're talking about the late 90s and early 2000s. Kind of the internet was very new, and very HTML and very dial-in modems. So don't think of the internet of what it looks like today, but you would go on and see business for sale. And there was only a couple of websites globally that sold businesses at that time. And I'm talking 1999 for the first one. And I listed one of our restaurants for sale and I sold it in a week. So, and that was one of our restaurants. Now, to imagine kind of when my dad's friends who all owned family-owned restaurants, being able to get that kind of a result for that kind of a price, they were very interested. I quickly looked into what it cost, what people charge to sell businesses, and I heard it was anywhere between 5 and 10% of your sale price for a business. So literally within a year, I sold four businesses and made literally a couple $100,000 as a 20-year-old. And that woke me up to sales of large ticket items. And I also found out that I can't sell real estate without a license. These are governed bodies. There's rules, regulations, and a million things to learn. But I went to school, I finished university, and I went to Ryerson for accounting and financial management, worked for a couple of the major banks and contingency companies for small business. And that led me to become a team leader. That led me to supervise a floor, because that's my management style. The way I work, I work well with people, and I kind of grew quickly at the banking sector. And that's small business banking, where a lot of my clients were brokers. A lot of my clients were just all these different paths of life, but they were all self-employed. And I'm looking at what they're doing and how they're doing it. And sometimes a lot of what I had to do was restructure them, meaning they were either failing in business, something was wrong, and they would either get refinanced or recapitalized, or they would fail. And 90% of the people that got recapitalized owned real estate. They had a common denominator. So I was like, I'm starting to now see the correlation with my dad's teachings my whole life around real estate and the actual proof in the pudding that with real estate, it can give you a second chance in life, a second chance in business. It can hold you through a storm until the sun shines again. But whoever didn't have an asset was literally doomed to a consumer proposal or bankruptcy or whatever the case may be. So when I saw that, and I saw what can be done, how money can be made, and how easy it is for some to help, like for me, I find it very easy to help people, to guide them into the right direction. If I see an opportunity, I do the due diligence and it works, I spread the word. That's what I do, because it brings me great pleasure to see other people win. And when you see other people win and you actually care for them and you can make a living off that, that's where I knew what was next for me. And I got into real estate, and I never practiced residential real estate in my life. I always did investment focused real estate, meaning using bricks and mortar to profit and build wealth. So that's how I got into it. That was the whole thought process. And from there, it's evolved to, of course, to what it's become today, which is a multi-million-dollar team.
So tell me more. What types of people do you work with today on the investment side? Because you can invest in so many different ways in real estate. So who are the types of people that you work with and that you're best suited for?
Yeah, so I'll give you some more context. I'll give you a little bit more background of how this thing works. And it's not just me. There's a million great people out there to work with. So what you need to look for is so what I look for in clients is a genuine ability to invest, meaning they're of sound mind. They've read a few books already. I will not take somebody who knows nothing or try to convince them to do something. I'm not a salesman. I'm a consultant that presents proper opportunities. So I will never tell somebody, well, if you do this, you're going to win like this, and please believe me, and please trust me. Never. I need to know that you have lived long enough on this planet to know that there's charlatans out there. There's long enough you've been out there on the planet that you know that there's good people out there. And at this point in your life, you're looking for good people. You know what bad people look like. You know what shit looks like, for lack of a better word, and you're looking to do good business with good people. That is what I seek in my clients. My clients can rest assured that everything that goes off my shelf is going to meet certain criteria. And even with that being the case, there is not a single deal that I will do that they don't have independent legal advice. And when I mean independent legal advice, I will recommend them 10 lawyers who I know do proper due diligence. That I need to know what the lawyer knows. Like, if you're a residential lawyer looking at a commercial plaza, chances are you're not going to know what to look for. Yes, we're all real estate lawyers, just like everybody's an agent. If all you do is sell residential homes to new couples with kids, how can you possibly do the due diligence on an apartment building? You don't know what the mechanical looks like. You don't even know what a boiler is.
So you help people get into real estate who have some experience in life, who have the financial aptitude to be able to invest, obviously, but you make sure that they're served well, not just by you, but by other professionals that they need along the journey.
100%. So the thing is, if you've never invested in stocks before, if you haven't saved for your RSP, it's not about being qualified to buy, because I could care less. I educate the masses for free. I don't get paid for keynotes. I go on every stage that I can to inspire people to invest in real estate. But by the time they get to me, they need to look a certain way. And what I mean is not about qualifying them if they can actually close. It's about them having enough life experience to know the difference between things. So if I know you have 150,000, or let's say you have 30,000 in your RSP, but you make 60 grand a year, I know you're a saver. Because 60 grand a year in this economy means nothing. It's just not a lot of money. But if you were able to put away 30,000 in the 7 or 9 years that you've been employed, and you make 60 grand a year, you're somebody who I'm going to help. And I will go to the end of the earth to help them. If you're a high net worth individual, what did you do? Were you in business for self? Were you a school teacher? What were you? Where do you come from? What do I present to you to keep you challenged, to keep you fulfilled, to keep you profitable? That is the mindset that I operate from. That is the mindset that I instill in the people who work with me. And that is kind of our value proposition to the marketplace. Meaning you're going to get what we at the REC Canada Group call the real estate action plan. And that's very similar to a KYC in financial services. Get to understand your client, know your client, and give them solutions that are right for them, not right for someone else.
And recognizing that everybody's situation is different, but there can be some commonalities amongst situations. So what are some of the approaches, some of the opportunities that you are reviewing today with the people that you work with?
Yeah, so I mean, opportunities never end. The opportunities that I'm looking for, like, I don't want to hone down on any one specific opportunity, only because I never want to get a call. Can I have more about that opportunity? I'm not going to answer you unless I know who you are. So basically, right now we are in a recession. So
you think, even though that nobody said formally we're in a recession, you believe that we're in a recession?
I know so. So I know so. I'm preparing my business for it. I'm preparing my personal strategy for it. I know we're not heading into a recession. I know we are in one. And what I mean by that, when the government says 6.8 inflation, the real number is 15 to 20%, because I have the proof. I go to the grocery store, I go to the gas station. I know that if we were to follow the consumer price index today, 6.8 is nowhere near where that actually is. Our grocery, I have two small kids. My grocery bill went from $200 a week or $220 a week to $350 a week. I just put gas in the car yesterday. It was $220. What are we talking about right now? It was $90. Oil was in this big glut. And all of a sudden, whoever the powers that be decide that we have not enough oil, or it costs too much to get it over here. All these things. So to turn a blind eye, to pretend that we might be going in or the fall is going to be better. We know as a fact that the United States last week launched a 0.75 super interest hike. Our government will do the exact same in July. Even if they were to do 0.5 of a basis point or 0.75, the fall is not going to be a better place. It's going to be a worse place. And we just, all we have to do is so simple. All we have to do is acknowledge and roll with it. Meaning you cannot do the same thing in a different environment and expect the same result you had. So you have to go back on a little defense right now. You have to play defense. You have to maybe get a ladder, step on a chair, and look at the whole field. Don't be caught in the trees. Where do you want to go? How can you get there? I can guarantee you that people just like me, and I'm not alone, are going to profit and win through the recession. Because the only thing that I'm focused on is finding opportunities that can guide me profitably through the next 3 years, 2 years, where we're going to start seeing that upswing.
Wow. So with the clients that you're working with today, and you're talking about the challenge of recession, and obviously higher interest rates is a big part of that discussion. So how are you guiding people today as opposed to 2 years ago? How are you guiding people with regard to these headwinds that you're talking about, but recognizing that there's still opportunities here? You just may have to approach things a little differently.
Yeah, so there's massive opportunities here. So what people need to understand, and again, I'm going to be very, very biased to real estate because that's my business. That's my whole life, basically. I breathe, eat, and dream of it all day, every day. I'm passionate about real estate, and I'll give you exactly how this is done. There's a saying in my business: interest is up, rents are up. Your audience, this audience that I'm blessed to speak to right now, needs to understand one thing. We're looking at the asset class to profit. So take everything else aside. We have a buyer pool that's looking to buy real estate. Up to February, people are screaming in affordability. But there are multiple offers everywhere. Who's buying? How do they have all this money, all these crazy things? It's very simple. Money was free. You could get a mortgage with a 1% interest rate. Who thinks that that's normal? But you're stress tested, so you're able to pay up to the prime plus 2, which was at the time 4.5%, 5%. So if anybody's wondering, are these people going to be okay? They're going to be just great. They're going to be just fine because our conservative system tested them. What happens now is economy is bustling out of control, pandemic or not, unemployment is down. So the government has to take action against all the money that they printed. So this massive buyer pool that was getting approved at lower rates with free money from the banks at 1 and 1.5%, just got their knees cut from under them with a 2% increase. That took a lot of people out of the buyer pool. Where do these people need to go now? Did their life stop? Do they all have a parent's basement? No. They have to rent. So the rental pool just doubled. There is multiple offers on rental units all over the GTA consistently because I see them. I have 55 agents on the street screaming foul that they can't put people in rental units. What does that do to rental prices? The trajectory is shooting up. So a recession has landed, and me as a landlord and every other landlord and real estate investor, this is the time to celebrate. This is the time to crack the champagne and rejoice, meaning that your investment is now in hot demand. And I'm not saying this from an evil landlord, prices are up, money is in. This is your investment, guys. This is what you did it for. And your choice of investment is winning. So what this is going to do, it's going to maintain the price of the market and slow down the appreciation a little bit, only because buyers cannot afford bigger prices. So I just want people to understand the correlation and balances. There is never, oh no, market's crashing. If anybody is waiting for the market to crash, you will be waiting a long time, a very long time, because it's not. The fundamentals have not shifted. There's still massive demand, no supply. The only thing that has changed is the affordability to the buyer and where the money is going. Either if prices come down, if they came down 10%, great. To the buyer, they're still up 3-4% because the money's not going to the bank, not to the seller's pocket. So nothing's fixed. They're not getting it for cheaper. So people were like, no, but I bought for 50 grand more. Your interest rate is half of what this person is paying. Count your blessings. Understand the difference. So educate, educate, educate. Read books, consume data that matters, that helps you interpret opportunity. And we're here to help with that.
This has been a great discussion so far. Thank you. Thank you very much for agreeing to be on the podcast. So as far as the approaches, and what you've done is excellent, because you've really set the tone for the right mindset that one has to have anytime you invest in real estate, but certainly now with the conditions that you explained in detail, which is very, very helpful. So with regard to people that are investing in real estate, there's different approaches to get in. If you want to be in rental with rentals, do you look for something on the market? Do you look for something in existence on the market, a multi-unit or even a single unit condominium townhouse or condominium apartment building? Do you look at pre-construction right now? Is that an opportunity? How does the current environment filter down to what represents opportunity? You did talk about it from a big picture point of view, but I'm just trying to get down to some specifics as far as types of real estate.
It depends on who I'm speaking to. To the masses, I suppose, there is no one size fits all, but pre-construction is a very scalable investment for me to be able to bring to the market, which is why I do so much of it. Meaning you cannot negotiate 40 homes in one neighborhood any other way. So if I believe a neighborhood is on an upward trajectory, if I believe a city is on an upward trajectory, for me to sell the volume that I do one by one is very difficult. So if I believe in a neighborhood, I'm going to go meet the builders. I'm going to go to the city's zoning department, see who put in applications, because that's public record. and I'm going to reach out to the said developers. If I don't know them, I know most of them because I sell them assemblies of land. I'm a commercial broker, so I know where they're going. And when I find out where they're going, I'm going to ask the question to my client, why do you believe in downtown Burlington? Why do you like Southwest Calgary? For what reason? Why did you just spend 30 million bucks on this land? Well, they're going to say, well, my good friend sits on the board of the hospital and they're putting in a new wing and the university's on an upswing and people are loving the Calgary Flames and everybody's moving here because the Flames are so good, or whatever the case may be. So when you find out that there is an area regenerating, if there's a new town being built, if there's a massive new employment node, you need to follow that. New construction enables you to lock in a price that by the time it's completed, the value has shifted. And we're always looking, obviously, for a profitable upwards trajectory. So with pre-construction, I can do that in mass and scalable, where I control the quality, I control the price, I control the floor plan, I control everything except time. So I'm willing to take 8 out of 10 in most cases. And that's where I put a lot of my clients. If you don't, that creates a liquidity situation. So this investment, although very profitable, because you only put 5, 10, 20% of the purchase price down, it does take 3 to 4 to 5 years to complete. The only downfall in that strategy is the liquidity. You have none. So if something happens, you would need to get out of that deal only by assignment, meaning assigning the contract to someone else. In the past, this has been also used as a profit center where people sell it before they even close, but the government is now taxing those. They found out the loopholes. Unless you have an emergency, you can't really use it to profit because they'll tax you on the way up, on the way down, every single way. So they're trying to cut away the speculation of the marketplace, but new construction is just still a very strong way to invest. I'm just saying from a liquidity perspective, it's just not there. So if you ever are concerned about liquidity, this would not be for you. Where a resale property, you can sell anytime, even though it takes you 1 to 3 months or whatever the case may be. It's still far more liquid than pre-construction.
Does there ever get
things to think about?
Do we ever get a point in certain areas, like recognizing in Southern Ontario, the Greater Toronto Hamilton area, it's going to continue to grow by 150, 200,000 new immigrants every year and foreign students. So the demand is clearly there for real estate. However, is it possible for certain areas to get saturated, recognizing the overarching big picture is huge demand, but can there be too much development in certain areas from an investor point of view?
Yeah, so I don't think so. Right now, we're so severely underdeveloped. Like people will drive. Right now, we have the most crane in North America, in this city, in the GTA.
Right.
And people are like, who's going to buy all these buildings? These buildings have been sold 3 years ago. The cranes that you see, we don't build on spec in Canada. The bank will only fund development that's pre-sold on a sound financial business and pro forma in order to fund it. So when you see a crane in the sky, that's gone. Way gone. Somebody like me has already made $250,000 upside. So people need to understand that to win with pre-construction investing, choose a neighborhood that's underdeveloped. To your question, Rick, can an area be too developed? The answer is when you start thinking that it's too developed, it's typically because there's still that much demand. You got to think that your choice of buying 1 unit is not equal to somebody who planned on building 600 units. They have done so much data analysis and market fundamental reading, and every professional and every report has been written to substantiate the demand for it, or else they would never get funded for it. So if the bank thought it was oversaturated, they wouldn't fund it. So there are the good news about following smart big money is the fact that the smart big money does a lot more work than you will ever do or have access to do. Not to say be blind and just because somebody did it, you do it too. But fundamentally, there's a reason the bank will give 500 million to keep developing density around subway stations, because they know that people cannot afford a car anymore. When affordability gets this skewed, what goes? Luxuries. I'll take the bus, but I'll live closer to the city, so I don't have to be on the highway for 2 hours. I'm not going to pay $2,000 a month in insurance to have a car in Toronto that I really don't need it. I live in Mississauga. You're out west, Oakville, Burlington. My insurance was $1,000 when I lived in Oakville. $1,000 a year. In Toronto, it was $4,000. The same age, same car. How can you maintain a car when you have to pay $2,500 a month in rent for a 1-bedroom? How can you maintain a car if it's $38 to park downtown? There's no point. So when we see this intensification around the transit, there's a reason. Buy close to transit. You'll always win more. All these little nuggets come out from experience only.
Simeon, I can't believe we've been speaking for almost half an hour. This has been tremendously insightful. I must say, you know your material. You articulate extremely well, and people know where you're coming from, and you've got some great passion. If somebody wanted to have a conversation with you or find out more about what you do, what's the best way for them to do that?
The best way is reach out through any of the social platforms. I'm quite engaged. My team is quite engaged on Facebook, Instagram. Feel free to check out our website, reccanada.com. Feel free to mention that you saw it here on the Money Podcast so we know where we met. And we can, of course, thank Rick accordingly and be able to give you the value that we can. But reccanada.com is our website. If you're in the business of real estate, check out my podcast, brokersplaybook.com, which speaks to and trains real estate agents to become investor focused or grow their business through value. Because that's the only thing we believe in. The only way to grow is by making more people happier. So if you're ever wondering how to do that, we're happy to help.
Well, listen, thanks again, Simeon, for being on the Mirror Money podcast. You've been most insightful and enlightening at so many different levels, and I really appreciate sharing your wisdom with us today on the Mirror Money podcast.
God bless, my friend. Thank you for having me.
And I want to thank everybody for tuning in. We'll see you next time on the Mirror Money.
Thank you for listening to the Mayor of Money podcast. Click the subscribe button below to be notified when new episodes become available. If you'd like to have a one-on-one discussion with Rick or have an idea for a particular guest or topic, contact him at rick@rickgoldring.com. See you next time on the Mayor of Money podcast.